Greg Gibson joins me now. He's the president and CEO of BonTerra Resources. Greg, welcome.
Thank you. Thank you for having me.
Greg, let's start with an overview. What is BonTerra Resources doing right now, and what's the progress of it?
Well, the progress that we've made over the last 6 months from a market perspective has been very little. From a company perspective, it's been very good. It's been very encouraging as we learn and get a better understanding of the structural geology of the entire belt that we're in. So we've been lacking news because we haven't been drilling. We started drilling a week and a half ago, basically on the ice. But we've been building the Mulroy underground we've initiated an underground bulk sample and test mining.
Okay.
With the view to bring it into production to take advantage of these gold prices. So there's been a lot of work done that the market hasn't seen. And given the state of the market, I don't think it really matters if you're out there dancing right now.
Well, not right now for sure. Gold has certainly seen a resurgence in both investor demand as well as in interest in the juniors in the last year as a result of a pretty robust price. Currently under pressure due to macroeconomic forces, we'll call them. But in general, the driving force behind the interest in gold has got to be its scarcity. And so in terms of what BonTerra is doing, how does a junior gold company sort of appeal to the investors who are looking to expose themselves to gold?
I don't know how to answer that question. I think we're living in a different world today in the junior mining space. From 5 years ago or back 2009.
Right.
We've gone from, 38 or 40 active resource funds to about 15, 16. The big funds that we get the big checks from are looking after their current ownerships. They have to support those companies. So the new money that you would expect to come into the junior sector is just not coming in the way it once did. And we can touch on Eric Sprott for a minute, who, he looks for high grade, and if he sees a high grade hit, he'll take a punt and then he'll swing for the fence on it. Outside of those high grade hits, outside of the Eric Sprotts of the world, there aren't many people writing checks. Whereas it used to take you 3 days to market Toronto. Now it takes you a morning.
Right.
You go to New York for 2 days. Now you're there for half a day, maybe a day, just because of the distance and the travel times.
Sure.
Where you would go out and you'd launch a financing at 4 o'clock in the afternoon, and within an hour you would have $50 million in your jeans. Those days are gone. So for the junior mining space, I think it's all about consolidation. Single asset juniors have struggled. They'll struggle more now because of the lack of capital. So I think it's a matter of just sticking with your knitting,
right,
focusing on the playbook. And if you can bring other assets together, you can pool funding and focus on one specific asset rather than 6. I think that's the route that juniors have to take.
I see. Okay, and so there's 3 deposits currently developed at BonTerra, and the main one, Barry, has over 2 million ounces.
No, Gladiator is the biggest resource, 1 million ounces of 9 grams.
Okay, sorry, I was looking at tonnage, not...
In the inferred category. Right. Then you have Barry, that is developed down to the 100-meter level. It's sitting at just over 500,000 ounces. And then you have the Mulroy deposit, which is accessed from the existing Bachelor Lake mine infrastructure. And what we wanted to do there is, I'm very bullish on saying that single asset juniors will always struggle. You're relying on that one pot of gold to always produce the same thing day after day after day, and it doesn't happen. So given the 3 deposits, given a central mill, you can have a pipeline of production that would lead up to 160 to 200,000 ounces over a period of time. And now you've got 3 assets that you can blend from. So every mine will get into a development cycle, so your tonnage is going to go down. You're going to get into pinching and swelling of these shear systems we mine. Your grade is going to go down. So when you have multiple operations coming into one mill, you have the opportunity to blend grades. You have the opportunity for one to pick up the slack when the other one is in a development phase, or you're into that pinching and swelling, or the grade just disappears.
Right.
So that was the strategy. We're still on course for that. We have 3 solid resources on each of them. We have to grow them. We have to infill drill them. The issue we face is the majority of the drilling now at both Gladiator and Barry is we have to drill on the ice. So that campaign has just started. Bad winter, lots of snow, milder temperatures, so we had a late start. But with the bulk sample at Mulroy starting, and having the mill right there, we're very confident that Mulroy will go back into an operating state very quickly.
Okay, great. So that was my sort of next question is then what's the timeline until this is a producing mine?
Well, I had a meeting yesterday with a major shareholder who is saying, you know what, pull back the regional exploration drills, focus on Mulroy, get it going. So we've begun our production drilling at Mulroy. We have a bit of time to get the lease in place because it's outside of the existing mining lease. So the bulk sample could very well just carry on into test mining into a production decision. We have an in-house PEA in place that's showing some good economics, and we'll put one out shortly into the public domain. But we're just really trying to get it right, James.
Sure.
I like to say that it's not my first barbecue, but I burnt a few steaks along the way.
Right.
And when you just have to get it right on these small mines.
Sure.
And that's what we're trying to do. And if the market wants to get mad at me or mad at the company because we're not out doing our PT Barnum Act, so be it.
Right.
We have a pretty good focus on where we're going with the end game.
Right. You've got close on to 40% of institutional shareholding. That's kind of extraordinary for a junior miner in this market, is it not?
It is. And institutions, BonTerra offers what institutions are looking for. You've got low capex because you already have the mill in place. Now you have to deal with some transportation issues, but you don't have to spend that $400 or $450 million to build a mill. It's already there. You've got cheap capex to get Mulroy and Barry into production. Barry's down 100 meters. Mulroy's got a shaft that goes down to over 1,500 feet.
Right.
So if you can show that you're going to have 50,000 ounces of production from one, 50,000 from another, and 60 or 70 from another, that's very attractive. It's de-risked right off the bat, as compared to having to build power lines, build mills, and infrastructure.
You bet. So I see where, so Barry used to be in another company, and you did a consolidation of these deposits.
Yes, so Metanor Resources owned the Bachelor Lake Mine and Barry, and Gladiator was owned by BonTerra. BonTerra bought Metanor. And the reason for the purchase was, again, the having that asset, the mill, without them having to spend the money on the permitting, a power line, and the cost of a mill, it just made perfect sense, where you're in a 100-kilometer circle that you can start trucking into the one central mill.
Sure. Interesting. Okay, so then the capex required to get to the rest of the way to production, do you have that cash on hand?
No, we don't. We have cash to get Mulroy into the bulk sample and test mining phase, and it will generate some money. We have the cash to get through our 81,000 meters of planned drilling over our winter season.
Sure.
The likelihood of us achieving that 81,000 meters is slim right now, given the late start we had.
Okay.
But we are funded to get everything done we said we were going to get done outside of the development of Gladiator.
Right.
And the mill expansion.
Okay, so then theoretically the success of the bulk sample program should drive some value and give you the ability to access capital at better prices.
You would think so, but when we look at the market today, nobody's writing you a check.
Right.
Right. So you have to pull up your socks, you have to tighten the belt and say, okay, well, what is going to give us value today?
Right.
That exploration drilling out on whoop property isn't. Pull the drills in. Start cutting back and just focus on infill at Gladiator Berry and get Moroy moving in the direction we want it to.
Based on your long history in the mining space, do you see a future where the interest becomes more broad towards mining again, or do you think that the limited audience that has sort of been shaken out as a result of many bad years is the future of mining?
Well, I think it has to come back. If you look at Northern Ontario and you look at the resource potential in Northern Ontario with a lack of exploration over the past years, the government has to start looking at it and say, you know what, Northern Ontario built Southern Ontario. You know, that's the history of Ontario, mining and forestry. And at some point, someone in government has to say, you know what, we just have to be a little more lenient here. The permitting process has to be streamlined. We have to play a more positive role with our First Nations groups to allow us to explore and extract the mineral wealth that we see in Northern Ontario. The other issue is all of the long holders are gone. So, you know, you've got the Ned Goodmans, the Hugh McCaulays, the Kevin McLeans, the Eric Sprotts. These guys were long gold. So they would buy a position in your company and they wouldn't be looking at the share price every day. Right? The millennial investor is much different, where they're looking for that 10-bagger, that bubble, that boom, 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 and out. Right? That's what we have to deal with today. So there are funds out there that will always have resource funds, but the resource funds are always driven by generalists. And the generalist today wants to own gold. He'll come down and say, here's $200 million, buy gold. Take Barrick or Newmont, whichever one you like better. Okay, and that's where the big money's going. So until we can get into a position where the millennial investor, the flash trader, is going to see the value of gold and holding gold, we're not going to see any big money come back, in my opinion. You know, if that makes any sense. I just don't see these big punters coming in to fill the shoes of the Bay Street titans that built the gold mining sector.
All right, well, we're going to have to leave it there. Greg, that's a great insight into both BonTerra and the gold mining space. Thank you very much for joining me today.
Thank you for having me.
You
Cheers.
bet.